Thanks for joining today's webinar, Balancing Detail and Accuracy with Budgeting and Forecasting. I'm Megan Turco and I'll be your moderator today. Before we jump in, I'm going to briefly go over how to use your webinar console. The orange arrow on the right side of your screen will let you toggle the control tray open or closed. And at the bottom of the control tray, you'll see a chat window. Please feel free to submit your questions at any time throughout the webinar via the chat function, and we will get to them at the end during Q&A. And additionally, on your GoToWebinar console, you should see an area for audio settings. If you're calling in through your telephone, please choose the Use Telephone option. And alternatively, if you're using your computer speakers, please select the Use Mic and Speakers option. I do want to note that today's webinar is being recorded. We'll send out the slides as well as a link to the on-demand recording of the webinar within about 48 hours. So definitely keep an eye out for this email if you're interested in accessing the webinar after today or sharing it with any other colleagues who weren't able to make it with us live this morning. With that, I'd like to introduce today's featured webinar speaker. Rena Driver is a manager on Armanino's Adaptive Insights team. As a certified Adaptive Insights implementer, Rena has managed multiple 100-plus hour implementation projects for companies in numerous industries, including technology, nonprofit, real estate, and higher education. She provides best practices for budgeting and forecasting alongside assistance with training, integrations, and internal controls. It's great to have you with us here today, Rena. And with that, I'm going to pass the presentation over to you to get us started.
All right. Thank you for the introduction, Megan. Hi, everybody. Like Megan said, my name is Rena. Today's webinar, we're going to go over some of the best practices for balancing your budget. You know, are you going to go with an extreme amount of detail, or are you just going to go at a more summarized level to get the accuracy that you need, and hopefully, you know, learn when to draw the line and when to model line items or apply an analytic. I'm going to use two real-life examples from some of my clients and kind of go from the Goldilocks approach of too hot, too cold, and just right. So in these cases, we'll look at budgets that went from too much detail to not enough, and then, you know, somewhere in the middle that gives them a great amount of accuracy with a low amount of maintenance. So the screenshots you're going to be seeing in this presentation are from Adaptive Insights, a cloud-based FP&A tool, but the underlying detail could be created the same way in Excel or using any other budgeting tool. So the first example we're going to look at today is a company that was attempting to budget their sales. They knew the key drivers of their sales were the number of new orders, their backlog broken out into different buckets of 0 to 30, 31 to 60, etc., invoicing by those same buckets, and then there were some historical conversion percentages that would, you know, take the backlog and push it into invoicing, and then invoicing into actual sales. And this is a pretty common revenue modeling that I see in quite a few of my clients. So our first attempt at planning for revenue was, let's take those factors of backlog and new orders and break it out by sales employee. So each sales employee would have their own specific percentages and, you know, number of new orders, number of backlog and invoicing, and Adaptive would then calculate what their total revenue was. So here is a screenshot of what this kind of looked like in Adaptive. Again, this could be any pivot table in Excel of how you're inputting all of your assumptions. So you can see that there are assumptions broken out for each employee name, by location, by product type, for their backlog, invoicing, and revenue conversion, and then calculated separately for each employee their total sales. So this was great. This level of detail in budgeting allowed the finance team a lot of visibility, a lot of flexibility in manipulating all the different components of what was driving their revenue. And they could do some great analysis. So they could do budget versus actuals reporting, you know, by sales employee, looking at backlog by sales employee and who's converting, you know, the most invoices to revenue. And they can hold their sales employees accountable for those goals and, you know, their total sales. One issue with modeling at this level of detail is the sales teams usually have a lot of turnover. So maintaining their list of employees was just constantly changing. We were adding a lot of to be hired placeholders, And then the company wanted to keep the historical data for those employees that had left. So they were just leaving the names in and kind of adding, inactive or no longer with the company. And the list of employees was just kind of growing out of control. Also, the combination of populating assumptions for every junction of employee name, region, and product was just a lot to maintain. So if John was selling for 10 different regions and maybe 4 different products, that's 40 different combinations of revenue assumptions. And then that's only one employee. So if you have, 30 to 50 sales employees, you're looking at a lot of maintenance. Even when you add a new employee, they would have to remember to go in and make sure to populate them with some, starting assumptions. So remembering to do that, sometimes they'd forget, and then they would end up with under budgeted revenue. So this process became pretty time consuming, and in the beginning we thought maybe this is going to provide more visibility to the budget, but actually having to go through and dig around to the different assumptions and track down where numbers were coming from all the level of detail, it actually ended up making things a lot less visible. So we went to revenue planning attempt number 2. We took out the employee level detail, and the company did some analysis and ended up populating their revenue assumptions and booking all of their backlog and invoicing by location, so location and product. And this was great. We had less maintenance, so going forward, they just had to make sure that each of the regions had their assumptions populated. They didn't have to worry about maintaining a list of sales employees, and it was easier to just track everything. Also much easier to perform a what if scenario. So if you are always wanting to see, best case scenario versus worst case scenario, if you have to go back and change all of your assumptions at every single sales employee, it's going to take you much longer to refresh that and get a new view rather than just refreshing it at the region. So what was the best about this? Their actuals were within 3% of their budget for sales for Q2 16. So I would say that is the most important result, that it was still accurate even after switching to more summarized sales planning. So the next example we're going to look at is personnel planning. So this is a big topic that pretty much all of our clients will budget for. And I have seen both sides of the spectrum on the level of detail used. So some companies will just go at a super high level, and this doesn't happen very often, but they'll just, plan more at a department level and maybe in a lump sum of their headcount. So we'll just say 10 people, we're going to add for G&A, and, we think it'll cost this much per person. Let's do that. And other people will, and most of our clients will load all of their current headcount data with all of their individual, names, start dates, pay rates, and raises, things like that. So you can do anything in between. Let's talk about what this company started with first. So they're a big public international company. So they have probably 3,000 to 4,000 employees, and our first attempt was to pull all of their headcount data from their payroll system and use a lot of columns of data to drive assumptions and calculations. So you'll see in this screenshot here we have name, title, state, start and end date, hours per week, health plans, and this is just a small snippet, so there were probably about 10 more columns to the right of information. We try to establish the payroll tax and benefit rates for all the different countries, and as you can imagine, it's pretty hard to figure all of those other countries out. We know U.S. pretty well, but coming up with the payroll tax rates, for random countries in Europe and Asia is a little bit more difficult to track down. We also were trying to come up with bonus expenses, and every person had just completely different bonus plans, and even with across different departments, there were different ways the bonuses were hitting, so that was pretty difficult. In this list, we also had interns, contractors, and part-time employees, and also we had our budget managers adding in their planned hires. So this sheet had a lot going on, a lot of information, and I'm sure you guys can kind of see where this is going to go. Here is a screenshot of an example of the benefits and payroll tax rates that we were trying to maintain. So, we have 3 different health plans populated here. We have different payroll tax rates by state even, and then you could flip this over and look at Europe and different countries, and they would all have their different assumptions as well. So a lot to populate here. And, are these percentages for some of the benefits in the other countries even accurate? So we're not really sure. The issue with this method for this company, this works for other companies definitely that are a little bit smaller and have less to maintain, but keeping the data up to date and maintaining all of those employee level detail was very time consuming. The fringe benefit rates were not proving to be accurate, and our new hires were kind of getting lost in the data set because there were so many employees, and the interns and the contractors were in there. And speaking of interns and contractors, we had to write a lot of if statements to put employees in certain buckets. So, don't calculate payroll tax if it's a consultant or contractor. If it's an intern, don't apply a raise percentage. If an employee is in South Africa, we actually don't have fringe benefit rates established for South Africa, so let's use Egypt's fringe rate. So it was kind of getting out of control. Also, the pay rates were loaded in local currency, then converted to USD. One issue that we ran into here were that some of the employees were working in a country, although their pay rate was in a different country's FX exchange rate. So there was like a U.S. employee working in South Korea that had his pay rate in the system as USD, but it was backwards converting it to South Korean won, and that was really distorting things, as you could imagine. So in our attempt number 2, we went kind of the opposite direction and did more of a department level budgeting using substantive analytics. So we would take, a running quarterly average, or maybe we did 6-month average of salary expense divided by the average head count to come up with an average cost per head. And then we popped in, the planned head count, so that was, planned head count was current plus new hires to come up with a budgeted salary expense. So this was very simple, high level by department. The issue with this for this company was that by the time they closed their books and had their actuals data in, their future projections were already off. Also, there was not really any visibility into what would, be driving these changes in the salary expense. We don't know of that headcount what is the current and what is the planned hires. So, overall, it just wasn't even providing accurate results, and we needed to actually bring back in more detail. So here is our attempt number 3. We're going to go back to employee level detail, but let's modify it a bit. So let's load all the current employees from our payroll system, but first remove the interns and contractors, consultants, all those temp employees. And then let's also make sure that we have everybody's pay rate converted into USD, so we don't have to worry about maintaining that conversion and making sure that nobody is distorting it. Big change here is let's come up with one fringe benefit rate percentage for all the countries instead of having to track down different rates and maintain all the different rates even when they weren't even accurate. Another big change here too was putting the payroll system data into one spreadsheet, and then having the budget managers go into another spreadsheet that was specific just for new hires. This was great because the data is kind of a little bit more organized, and the budget, one finance person can manage the data conversion over to the current headcount sheet, while the other budget managers don't have to be bogged down by looking at all that other detail, and they can just focus on what they need to populate for their new hires. The screenshot on the bottom here is just showing how simple their assumptions were broken out. So you see just one benefit rate and just maybe one raise percentage for the whole company and not having to worry about splitting it out between too many different components. So the results here, the calculations were much easier to follow as with our first example in the revenue modeling. The assumptions and data set were much easier to maintain, and just a better insight of how headcount changes were driving budget numbers and much closer, much more accurate to the actuals. So that's revenue and personnel. I know that is only a portion of your budget. So what are we going to do with all of the other line items? My advice would be to set a threshold for materiality. So, if something is only $1,000 in expenses for the year, don't worry about figuring out all the drivers behind it. Maybe just say equal same as last year or equal same as last year with a 5% increase. But then, scan your P&L and balance sheet for those line items that do stand out above that threshold, and then try to understand the drivers behind the number. And when I say drivers, I mean the main ones, not every single component. So, if you wanted to plan your copying expense, maybe it's a number per head count, and, don't go into some deep analytic of, well, the G&A team on average does 15 print jobs a day, and each print job is 10 pieces of paper, and in each package of paper there's 100 pieces of paper, and then we're coming up with a very detailed calculation just to come up with our copying expense. So I would advise against that if you can. And just overall ask yourself if you need to budget by that lowest level of detail. Do you need to budget by employee name? Do you need to budget by project code? Or can you do it by department and location? And will that still be accurate enough for you? So just to reiterate, the lessons learned: do not plan at a level of detail that creates more work for your finance team to maintain. But don't settle for analytics when they do not work. Make sure that your budgets have elements that are easy enough to manipulate if you want to do what-if analysis, but don't take too much time to come up with those what-if scenarios on the fly. Know when to draw the line between both approaches of, level of detail and, summarize level of detail, and know where you're comfortable with that line. So at this point, I see a question, so that's perfect. What questions do we have? Is there an API?
So if you do have any other questions, feel free to submit them. We do have a couple that came in. So the first one is, was there an API to pull the personnel data from the payroll company? And I know that came in during your personnel planning discussion, Rena.
Yeah. So for this software, Adaptive Insights, there is a connector that can pull from HR systems. They were in the process of setting it up, and I know some clients that use it, but in this case they hadn't done it yet. Usually when you're planning for personnel, you really only need to refresh your data when you're budgeting. So, when you're going to do your budget for the year, you're going to load all that in. And then usually you don't need to change it unless you are, doing a reforecast. So, depending on if you want to set that link, depends on how often you're going to be reforecasting. So if you find that you're reforecasting every month and maintaining the employee detail is a lot, then you can definitely, work with your whatever FP&A system you're using, see if you can get an automated connector to pull in your HR data. If you're really only doing a budget once a year, then it probably doesn't have too much of a benefit because you're just loading the data once.
Thanks, Rena. We do have a couple other questions. The first one is, what would be the best approach for budgeting for consultants and contractors?
Sure. So consultant and contractors, I kind of touched on a little bit in my example of how we pulled them out of the personnel sheet. And what I have a lot of clients do is they'll create a separate place for their consultants and contractors, and they'll just have kind of the level of detail by professional services firm. So maybe if you're using Armanino, you have a line item that says, Armanino consulting services, and you're going to look at what you spent last year, and then you can kind of have your budget managers give you input on where they see this going this year, and then just budget it out by month or by year. So look at the level of detail kind of like in the middle where you're budgeting maybe by vendor, by professional services firm, but not by, individual consultant.
And one last question for you. What level of detail would you recommend for budgeting travel and entertainment?
Sure. So travel and entertainment is another one that we see a lot. And I've worked with one client where we started off doing our travel and entertainment actually by specific trips. So we're saying, okay, a trip from San Francisco to New York costs this much in, this many days, and then a trip from San Francisco to LA, and then, London to Singapore, and we had all this big group of assumptions for every combination of where people were flying. And then the CFO came back and was like, whoa, wait a minute, why are we doing this? This is, who even knows where you're going? And then people are having questions, well, what if I, fly from SF and then I have a layover in Dallas and then I'm flying to New York? Which assumption do I use? And then what if I go straight from London to Africa instead of going to Singapore first? So the budget managers were getting confused on which assumptions to use. So we just kind of like narrowed it down and said, okay, domestic trip and international trip, and then number of days. So let's do some analysis and come up with some averages based off of historical data and say, let's just budget at this level of domestic versus international. And then, have a generic assumption for your meals, for each of those trips, and your lodging and airfare for each of those trips, and not anything else.
Thanks for the details there, Rena. So we are actually going to, that was our last question that came in for our Q&A. So we are actually going to let everyone go a little bit early here. I know Rena got through the content really quickly and concisely. So thank you, Rena, for being our featured speaker today. If anyone does have any more specific questions for Rena or would like to find out more about how they can, balance the details and the accuracy for your own company, feel free to contact Rena. Her contact information is up on the screen, but as I mentioned earlier, we will be sending out the slides as well as the link to the on-demand recording of the webinar, so don't necessarily need to copy that down really quickly right now. As you exit today's webinar, there will be a quick survey. Please take a moment to let us know your thoughts on the webinar, on the content and everything, and so that we can continue making awesome webinars for you guys in the future. So thank you very much for your time and have a great day.